Two stocks to buy before they recover. Those are two growth companies with a lot of upside that I never talked about on YouTube. They're very popular on X. A lot of retail investors own them, and a lot of people have been asking me to analyze those stocks. So I'm gonna give you two very interesting ideas in today's video. Growth stocks, again, not talked about a lot. Very interesting companies, especially the first one is very interesting. So I really hope you enjoy it as always. The first stock is a company called Amprius, ticker symbol AMPX. The stock is down 31% over the last month. It was very hot. It reached like $22, $23, and now it's back to about $11 per share. Amprius sells batteries, and if you think about the trends that we have right now in terms of the drones, not just military drones, but even delivery drones in general for medical stuff, healthcare, and even food in many different areas, well, all those drones require batteries. Amprius is selling those batteries. Same thing with certain satellite and space applications. They don't run on gas or whatever. They run on batteries, and they use some of them use Amprius batteries. Same thing with light EVs such as scooters and bikes and other things. They also need batteries. Same thing with robotics like humanoids and other things. They run on batteries, as well as air taxis with Joby Aviation, Archer Aviation, and a lot of the developments that have been coming up. So this is a massive TAM for the company, massive total addressable market. And the way they do it is they manufacture what they would call a silicon-based battery. Now, this is really important for two reasons. The first one is the fact that China controls 78% of the graphite market. So the old batteries are mainly graphite-based batteries. China controls 78%. So there's some national security concern with this area. Once they're doing a silicon-based battery, it's much more abundant, it's much more available. They can even make it cheaper. But most importantly, they can make the battery last much longer than a graphite-based battery. So a silicon-based battery has many more advantages, especially for what we need in terms of the drones and other things that consume a lot of power over the very long term. But the only difference between them is there were a lot of talks that those batteries that they make, they could potentially light up on fire, or they could catch fire much easier than the graphite-based batteries. So this is still a technology that's coming up. You know, it's getting more and more popularity in drones and other areas, but there's still some risks to be worked with and some technologies that need to be advanced. The company has been growing rapidly in revenues, 42% quarter on quarter, 18%, 13% quarter on quarter. So this is massive growth for the company, about 30 to 40% annual revenue growth for a company like Amprius. It's very impressive. Now, the other thing that's been growing as well is our shares outstanding. The company's shares outstanding have been skyrocketing from 85 million to about 136 million shares outstanding because the company has been unprofitable. They had to raise some money, but it's getting closer and closer to profitability, as they could potentially be profitable as soon as this year, as soon as Q4 of 2026. So for me, this is very interesting. I think once they turn profitable, they have a good balance sheet. They're unlikely to be diluting as much as they did before, and that will also help the stock and help shareholders in general. Now, in terms of the valuation on the stock, now they pretty much put up 73 million in revenues in 2025. They're guiding 125 million in revenues for 2026. Their 2030 target is about $600+ million in revenues, with about 30% plus gross margins, 20% plus adjusted EBITDA. This is very impressive for the company. Now, if you look at the company's multiple, it was a bubble. People asked me about it before. I told them Amprius is a bubble. It was trading at 22 times sales. This is ridiculous. Now it's trading at 11 times sales. It's getting a little bit better. My target normally is 10 times sales or under for me to consider any potential growth company. So I think under 10 times sales is very interesting. Now, if we want to value the stock on 5 times sales and 10 times sales for 2030, we can take the $600 million and we put up the calculator. We put up 600 million and we time it by 5 times sales. This is about a $3 billion market cap. The current market cap is about 1.7 billion. So this is about 76% on the upside over the next 5 years. 4 years. I don't know about you, but that does not really excite me. Normally, when I'm using 5 times sales, I want at least a double, triple. Like I want a stock that's really cheap. Now, this one is growing again, 40, 50% revenues. So it deserves a slight premium on sales, but still, I think the premium is unwarranted. Now, if you use 10 times sales, you get about $6 billion market cap. The current market cap is about 1.7 billion. Then you can get about 250% on the upside or so over the next 5 years. That's much better. But for me personally, I'm waiting for Amprius to go under 10 times sales. Under 10 times sales is about $10 per share. I think it would be much more interesting, but it's not bad here. If you like the company, you want to research it, start a small position, dollar cost average down. But for me, I told you guys I own Ouster. I think Ouster is a much better bet on sensors versus the batteries due to the risk of those batteries catching fire, and then the whole thing could be ruined and they can get lawsuits and they can get all these things. So it's a high risk business to be in. And for me, I want to pay under 10 times sales, which would be under $10 per share. So I have the stock on my watch list. I might consider it, but this is a popular one that I analyzed, and I believe the stock is somewhat fairly valued, but I would love it under $10 per share. Now, the second one, which is a much more popular stock, especially on X, and I've been bearish on the stock all along, and this is a stock called Ondas, ticker symbol ONDS. Maybe you never heard of this one if you're mainly on YouTube, but on X, it's very, very popular. Ondas is mainly a bet on robotics, mainly on robotics for military applications, which is where we're likely going to have massive growth, in my opinion, because if you can use robotics in certain applications, you can save human lives, you can save the lives of the soldiers that are being put on the front line. You can put robotics instead, and that helps save people's lives. So it's, I think it has a lot more use than being an industrial and other things. So it's a very niche industry to be in, and your customer is the US government, and they print unlimited amounts of money. So if they can save some human lives while having a technological edge, this is really big, and China has a lot of that, I think, better than the United States in terms of military robotics. So Ondas is in a sweet spot, and they have many different things for like land clearance, mine clearance, robotics, other robotics, for like front lines and underground stuff, and even some marine stuff and other things. So it's a very interesting business, but most importantly, they also have a very interesting counter UAS technology. So now we have a lot of drones flying around, and there's a lot of just drones in Ukraine, and all the drones in Iran, they're very lethal, and not a lot of systems can fight against them. So Ondas is mainly focused on counter drone technology, and they have some interesting technologies in this area. And it's not all pie in the sky. The company is actually winning contracts on a lot of those things. They have $1.6 billion in contracts that they won for a lot of things, such as military vehicles and other counter UAS technologies, and not just actually in military applications, but even in the World Cup stadiums, they won like counter UAS. If someone sends a drone or something, it detects it and it destroys it. So you need this technology pretty much everywhere, even for banks and other things. It's not just for military. So this is a very interesting area of growth. Now, the way Ondas has been doing it, which I think is smart, is they're not trying to put a lot of money in research and development to come up with a new technology and try to somehow test it somewhere. They're not doing it. What they're doing is they're going into Ukraine, and they're seeing what is working and what is not working. And whatever technology or company is working in Ukraine that's being tested in real time, they're acquiring those companies, or they're acquiring a stake in those companies. So instead of them trying to, again, come up with their own products, they're acquiring what is actually working and what is likely to get a lot of contracts in general. Now, the only problem is with this whole M&A strategy and Ukraine strategy is the dilution of shareholders. And this is why I was against the company. A lot of people on X, they love the stock, and they say, look at the revenues. Revenues went up 6x, and then the stock is still flat. Well, this is because shares outstanding went from 100 million to 445 million shares outstanding. And they did another acquisition, and they're going to dilute shareholders even more. So the management team is giving me the vibes that they are willing to acquire a company at any price just to grow the number of revenues without focusing on revenue per share, net income per share metrics. They just focused on the total number. And, I understand if they're trying to build a product, build a company, but they keep on doing it. And to me, it feels like it's never going to end. So I don't really like it for this reason. And this is one of the reasons why I was bearish on the company. Okay. Now, for their 2030 guidance, they guided 1.5 billion in total revenues. For 2026, about 180 million. Now, the company acquired again another company, and they're growing really rapidly. I mean, I have to be honest. Like in January, they guided 180 million for 2026. Now their guidance is about at least $390 million. And this is because, again, they did like 3 or 4 acquisitions and it boosted up the revenues. So their target for 2030 is 1.5 billion. It will likely be much more than 1.5 billion. I'm just being honest. If they keep doing this, it will likely be higher. But I also don't know how high will be the shares outstanding. So this is how I'm struggling to value the company. But the way I'm doing it, again, is if you take, let's say, 1.5 billion, okay, and you look at the market cap right now, it's like 3.7 billion. So if the stock trades at 10 times sales, this is a $15 billion market cap against a $3.7 billion market cap. This is like a 3 or 4x in 4 years. The stock looks very, very cheap. But what a lot of people are missing is the underlying warrants on the stock. So the stock has about $4.9 billion of warrants that expire between $20 and $28 per share. So if you want to do anything on the market cap, you have to adjust for the warrants. So if you're taking 3.7 billion, or let's say $4 billion, you have to add in about $5 billion of warrants. If you do that, the total market cap is $9 billion. So even if the stock trades at 10 times sales, which is 15 billion, right now you're buying it for 9 billion, you don't even get it double over the next 4 to 5 years. So for me, on this again, I think it's an interesting story. I like the areas they are in, but I think the stock is still relatively expensive. I don't like the team that's diluting a lot, like Redwire stocks. They just keep acquisitions at any price. If they slow it down and the stock trades at about, I think, $5 per share, that would be very interesting to me. But until then, I'm personally skipping on this. I think it's better to focus on, you could say, companies that are picks and shovels like Ouster, even Amprius. Better than trying to bet who's going to make the best robot. It's best to bet on the people selling the shovels to all those robotic companies like NVIDIA is doing with chips. So this is how I'm viewing it. And my favorite one of those is Amprius, but I like it a little bit more under $10 per share. And that was my opinion on those 2 stocks. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.